All right, very good. Thank you so much, everybody. This is Prashant Kumar. I'm the founder and the president of MyRealtyGains, MyRealtyGains Management LLC. We are multifamily syndicators. We started about 4 years ago, and ever since the journey has been pretty good. Last year, we were able to do approximately 1,200 units in GP capacity. This year has been a little bit slow so far because of the obvious reasons, but we are preparing ourselves for the boom that might show up in 6 to 8 months. That's our thought process, but we never know what is coming along. My website is www.multifamilyrealtygains.com. And in the end of the presentations, you will see my cell phone number also, but it is 631-428-6479. We do these presentations once in 2 weeks. We recently restarted it after some time. We were doing it earlier last year, but then we were busy with our deals. And once the deals settled down, then we said, let's restart them. So this is our third or fourth one in our second series. And today I'm honored to have a good friend of mine, somebody whom I know for last, probably a year or so, very known face in this industry, Alina Trigub. And I will introduce her first, and then I would let Alina talk about what she's going to talk about. She's going to talk about relationship building and raising capital today. So let me just talk a little bit about Alina first, and then I will make Alina the host of this presentation. Alina is the founder and managing partner of SAMO Financial. It is a boutique private equity firm specializing in helping a select group of people passively invest in the commercial real estate. For over 6 years, Alina has been an equity partner in various multifamily private placements nationwide. Alina's business motto has been articulated well by Warren Buffett. Warren Buffett says someone is sitting in the shade today because someone planted a tree a long time ago. And that I feel in Alina's personality, her passion is to teach others how to build wealth. She has been a founder of 2 meetup groups named The Power of Passive Investing Through Real Estate, which gather in New York and New Jersey. And I can go on and on talking about her, but in the interest of time, I will probably stop here. You need more information. I mean, she's the wealth of information, and she loves to help everybody. And she has been, she has invested in 1,200 plus apartment doors and over $10 million funds focused on self-storage and things like that. She has been in self-storage, multifamily, as well as in mobile home parks. Having said that, I would turn it over to Alina. And Alina, welcome to this webinar. Thank you so much for taking time to talk and giving your thoughts, suggestions to our viewers. And I'm going to make you the host of this presentation so that you can continue.
Thank you, Prashant. Thank you, Prashant. Thank you. It was a very warm introduction. Appreciate that.
You're welcome. So yeah, you are the host now, and feel free to start, whenever you are ready.
Sure. Okay, share screen. Can you guys see my screen now?
Yes, we can see your screen, Alina.
Yes. Excellent. Great. So good evening, everyone. My name is Alina Trigub. As Prashant mentioned, the topic of raising capital has always been one of the most popular ones. But I feel like when we talk about raising capital for anything, regardless of the field, whether it's real estate or funds for something else, that topic has to always correspond with another topic of building the relationship, because you can't raise capital really without establishing and building the relationship with other people. It's all based on building the relationship that hopefully lasts for a very long time. So before we dive into that, I'm going to share a little bit about my story, so you'll see where I come from and how I got where I'm at today. So I started my professional career as a tax accountant in a public world, but I never really liked accounting, so I've tried both public and private and figured it wasn't for me. So I switched from accounting to the information technology world many years ago, about 20 years ago or so, and I've been in information technology ever since. I've had many different roles, but they all evolve around connecting the two worlds, the world of technology and the business. And I've learned a lot by working with different people in different fields and different groups. And while I've been working in that field, because I had the tax background, taxes have always been on my mind. And while I was growing in my career, and so was my husband, so were the taxes, because we were going into higher tax brackets. So I've always been thinking about finding ways to minimize taxes. And most of you know that there is no better way to minimize taxes than real estate. Real estate is probably one of the best ways to do so. And after thinking about it for a long time, finally, about 7 years ago, I decided to take action. And I started researching to see what kind of real estate investing we can do. I've tried finding something locally in New York, New Jersey area, but as you probably know, the prices here are quite high. So, and given my accounting background, my requirements were pretty strict, so I couldn't find anything here locally. So I decided to start looking out of state. And while I was looking out of state, I came across this strategy, which was completely new to me, which was called investing through syndications. It was very, very new, but very interesting way to invest, because what I learned at the time, that as a equity partner, or passive investors, as people call that, I would be required to spend very little to no time on it. Essentially, just review the offering itself and decide whether I want to invest, and then someone else would do all the work. Well, it sounded enticing, and again, I jumped on doing the research and due diligence, as I was used to from my accounting and what years. And as scary as it was, placing a large sum of money, was 50,000 at the time, with someone that I've never met before, investing in a property that I've never seen before, somewhere 1,000 miles away, was very, very scary. But after doing the research, I finally decided to take action, and I invested in the first syndication, and then the second, and then the third, and then it was kind of trickle-down effect. It was a lot easier after the first one. I feel like the first one was the hardest one, but after that it became easier. Because number one, I was already familiar with the process, and number two, because I already knew what to look for. And the more syndications I invested in, the more I learned about various aspects of syndications, offerings, and things to look for in general, and what to talk to operators and so forth. And so while I was doing that, I was always keen on books. I typically listen to books, I don't read. So one of the books that I've listened during that time was Rich Dad Poor Dad. And I listened to an adult version, but when I learned that there was a teen version, I actually made my two kids read that book, because I think it's a great eye-opener for anyone, adults or kids. And the earlier someone can get a hold of this book, the better they are, I believe. So for those that haven't read Rich Dad Poor Dad, I highly recommend reading it. And so after after being an equity partner for several years, I realized that this is a great strategy, and I can help a lot of other people do exactly the same thing. And out of that desire to help other folks, the idea of my own company, SAMO Financial, was born with the main purpose of helping other people do exactly the same thing, invest in real estate and do it without any interruption to their day-to-day life. So essentially invest passively, build that passive wealth, and not worry about tenants and toilets, which was great. So in syndications, there are two sides of investing. There is an active investing and there's passive. And passive investing, essentially the side that I started on, was essentially looking at the documentation, doing my own research and due diligence, whatever made me comfortable, and that applies to everyone, whatever each person thinks is required from their perspective, to do the research and speak with the operator. And based on that documentation, make a decision. Do you want to invest in a syndication or not? So that's the extent. When it comes to an active investor, so that's the general partner, or they're also called key principals. These are the people that do the work within syndication. So these are the folks that are finding the asset, negotiating the price on it, then going through the process of buying it, bringing investors in, and then once the property is purchased, then they managing it and selling it at the end. So this is the person or the team rather that's doing all the work. So that's why they called active investors or key principals or operators. So all of these names are interchangeable. When it comes to passive investing, in addition to being an equity partner, there are actually a few other types of investing passively for those that don't want to be too involved in investing in real estate. So you can become a private lender and just lend money to someone who needs a loan for a short period of time or even long period of time. If you have property and you want to sell it, but you don't want to pay a large tax in the first year, you can offer owner financing, and this way defer taxes for many years ahead and have a passive income coming in your way on a periodic basis, again, for many years ahead. Or you can buy properties turnkey, become a turnkey investor, which essentially means buying single family houses that someone else had already renovated. They're in tenant ready condition. You just buy them. The property management places tenants in these properties for you and manages them. So your involvement is very limited. You pay for the property and then you work with the property management company on managing the property. Sorry, someone was getting in, so I had to admit them. So those are the ways to passively invest for folks that don't want to be active. They want to be as passive as possible in their investments.
Alina, can you please repeat on turnkey investor? What do you mean by turnkey investor?
Sure. Turnkey investor is someone who is buying single family houses that have been renovated by someone else. So these properties are in a rentable condition, completely renovated. There is no value add at all. Someone purchased them, added the value by renovating them, bringing them to a condition where they're completely rentable and in a great condition. And they, the company that renovated them, which is typically called turnkey company, they are typically also offering property management services. You can go with them or you can find another property management company. But what they do is they offer you help with finding tenants in a property that's already renovated, and they will property manage it for you. Again, it's totally your choice. You can go with them or you can find a tenant on your own. But because everything else is done by others, your involvement is minimal. That's why it's relatively passive. It's not as passive as syndications because there are still questions that arise from the tenants, which property managers sometimes cannot decide on their own. So they would come back to you when, you know, there may be a certain larger repairs they needed, or maybe there are questions about property taxes or other essentials. So while it's not completely hands-on, but it's not 100% hands-off. It's somewhere in between being an equity partner and being an active owner who is buying single-family houses and renovating them themselves.
All right, thank you so much.
Sure. Any other questions, Prashant? If you get questions, if people are typing in, or if someone wants to ask, feel free to interrupt me.
Yeah, somebody is asking, do you recommend any turnkey companies? I mean, to me, I mean, yeah, you can answer it, then I can probably pitch in a little bit more.
I have some companies that I can give the contact for. I personally have never used anyone, but I have a couple of companies that I know other people are using. If you email me, and you'll see my contact information at the end, I can send that information to whoever is looking for it.
And you would talk about only New York and New Jersey area, basically those companies.
Not at all. No. The companies I know, one is operating in Cleveland, Ohio, and the other one is operating in Des Moines, Iowa.
Okay. I mean, I know a bunch of companies, of course, in Cleveland, and I know a lot of them actually in Memphis, Tennessee. Memphis Invest, you know.
Memphis Invest is big. Yeah, I've never dealt with them, but yes, they're pretty big.
Memphis Invest, and there are like 4 or 5 of them right there, you know.
Yeah, there are plenty mentioned on Bigger Pockets, but again, you have to verify each of them separately and see which one works for you. And if you have specific geographic area where you want to invest, then I would say go to that area and look for the companies. So if you just search for turnkey companies, I'm sure you'll be able to get some results. Any other questions, or should we?
Not any more here. I'll monitor and I'll ask, you know, when somebody
asks. Sounds good. So if you, so that we went through being a passive investor. If you decide you want to be active investor, then you need capital to buy large properties, right? So what do you do as an active investor? You have to find that capital, or as it's also called, other people money, or OPM for short. So when you're owner operator or general partner, there are certain things that you need to do in order to find capital. So first of all, when dealing with investors, you have to be able to protect their capital. The primary concern that many wealthy investors have is protecting what they already have. And, you know, while everyone, of course, wants to make money, when it comes to people that are either high net worth individuals or ultra high net worth individuals, their main concern is preserving capital that they already have. So the idea is not to lose what's already there and be able to make something on top of it. In addition to that, you have to be able to promise realistic return. Where most investors go wrong is when they're trying to raise capital and promising huge returns. If you sound overconfident, your presentation will automatically appear to be a high-risk investment or even scam, which of course is not the message that you want to send to others. So what you want to do is you want to be above average, but you don't want to project too high. The last thing that you would want to do is to overpromise and underdeliver. So even if you think that your goals are possible to achieve, start by underestimating and then deliver more later, because it will create a sense of loyalty and reliability between you and your investors. If you tell your investors that they'll receive an ROI of, for instance, 8%, and they actually receive 14%, after all, you can bet that they'll put you in front line in their contact database and will be eager to invest in your next deal as well. You also have to provide your track record. So, of course, most investors expect to see a proven track record. They want to know that you can deliver based on your plans. And in the cases, if you don't have the experience, if you don't have the track record, then find a way to partner with others that have that track record, where maybe they bring into the deal the track record and you bring into the deal something else. That could be your underwriting skills or your relationship with high net worth individuals, or maybe finding a deal. You know, so there are many ways to bring value to the offering. So you need to find what your skill set is and what you're good at. And if you don't have that experience and the track record yet, then you need to find a way to partner with others by bringing the skills and the experience in what you already have. And your experience could be transferable from someplace else. Let's say if you were working in the mortgage industry and have been underwriting mortgages, chances are it's probably going to be relatively easy for you to start underwriting offerings because you have been in a similar field and you've dealt with Excel on a daily basis. So you should be able to transfer your skills to underwriting offerings as well. And then also finding a great deal. So everyone wants to find a deal, but there are two reasons for this. The first one is it's simply human nature. So if someone thinks that they're getting a good deal on a product, it automatically gives an impression of value. The second reason is that these individuals want to look smart and feel as though they're making a sound investment. So they all have someone they want to impress. It could be their spouse, could be their friends, boss, co-workers, or maybe even themselves. Regardless of who your potential investor is, you will want to be able to, they will want to be able to boast about how intelligent they were to discover this high yielding or trendy investment before everyone else. So help them discover this trendy investment. And lastly, you need to encourage the relationship building. Surprisingly, or perhaps not so surprisingly, having a personal relationship between both investing party trumps the rest of qualifications. How can you build more authentic relationship or find like-minded individuals that would want to work for you? Well, this is one of the most important habits to acquire as a real estate investor. You can start by attending local events and local meetups or even virtual events to get your face out there and start networking and talking to people. And if you want to discover your potential investors and achieve success, building the relationship is a must. Any questions before we move off of this slide?
No, there are no questions here.
Excellent. So relationship building is actually a science that was well defined in Dale Carnegie book called How to Win Friends and Influence People. So let's go over some of the principles that Dale Carnegie defined in his book to help you with that relationship building. So some of the techniques that Dale mentioned is in his book is number one, you should never criticize, condemn, or complain when you're talking to someone. You should always try to give them honest and sincere appreciation and try to engage with them when you're talking to them, make it into a conversation. So in other words, what Dale Carnegie was saying in his book, it's fine to have a healthy debate and healthy discussion with another person, but try not to go into criticizing or even condemning them for whatever they're saying. Everyone is entitled to their opinion and let them stick to their opinion. But if you find that you're talking about a specific topic or a theme that you really enjoy and appreciate, then be sincere and be very honest about it. Show your encouragement, show your enthusiasm, show that you really care about what they're talking about. Sorry, I didn't mean to switch slide. Dale Carnegie also talked about 6 ways to make people like you. So these 6 ways involve becoming genuinely interested in other people. So when you're talking to someone, make an effort to actually engage in that conversation and listen to what they telling you. Also, such simple thing as smile will go a long way. You'll see, if you look at two people, one is smiling and the other one is standing with a very serious face, unless the situation requires to be serious, then the one that's smiling will definitely attract a lot more people because that person would look a lot more open-minded. Another way to make people like you is to remember the person name. Someone's name is the sweetest and the most important sound in any language to that person. So remembering their name when they mention it to you will take you places. Also, it's really important to be a good listener. So when, let's say you met someone for the first time and you're having a conversation, of course, it's human nature to start talking about yourself, what you do, and about your personal story. But try to listen to the person on the other end. Try to hear what they're talking about, what's important to them, and to show that you're listening. What also works really well is to repeating some of the key phrases that they're saying. So when they said something, try to repeat not the whole sentence, that's going to look creepy, but repeat a couple of words. So if they said, oh, I went into so and so academy and I received such and such certificate, you can say, wow, you received these certificates, that's really impressive. And that shows you're engaged, you're actually listening to the person, you actually know what they're talking about, and your mind is with them and not someplace else. Talk in the terms of the other person's interest. So let's say the person you're speaking with is interested in golf. Maybe that's not something that you enjoy doing, but show genuine interest. Why are they playing golf? Ask them how long they've been playing golf, what made them interested in golf. And you never know, maybe after they tell you their story and why they're passionate about golf, maybe it'll pique your interest and you decide to go with them and play the next golf game with them. And another way to make people like you is to make the other person feel important. And again, do it sincerely. And again, the easiest way to do that is when you hear the person on the other end is saying something that makes you want to help them, or if they, let's say they're talking about their children and they're saying, oh, my daughter just graduated from college, I don't know how she's going to find a job with this COVID going on, it's really hard to do that. If you have a knack for, let's say, reviewing resumes, or if you know good recruiters, or if you know someone who is hiring in a field where the child is looking for a job, then be sincere, offer to help. Say, I can't make you any promises, but I know this high-end recruiter that may potentially help them. Offer that help, and that may take you places, that may go a long way. Dale Carnegie also talks about winning people by avoiding the arguments. Again, it's fine to state your opinion, but try not to force any arguments and try not to force your opinion on anyone else, because we're all entitled to have our own opinions, but let's stick to them. Let's not make it into a fight. It could be a healthy discussion. Also, you should show respect for other people's opinion. Don't tell the other person you're wrong. If you are wrong on the other end, then admit it quickly and be empathetic about it. And also, when you're talking, speak in a friendly way. Even if you're expressing your opinion that, let's say, is completely opposite to what they're saying, say it in a friendly way and maybe make a joke out of it to show that this is just a conversation, that you're not trying to start a fight or anything like that. Also, what works really well is getting the person to say yes to a lot of things. And that could be as simple as, oh, so you were born in say Brooklyn, New York, yes, or and you spend all your life in Brooklyn, yes, and you can go through a set of questions to which you already know the answers, or to which you know how the other person is going to be answering, and having them say yes to them again will make them friendly to you, and you'll be able to build relationship a lot faster. And also, as it was mentioned earlier, let the other person do the most talking. So if you're having a conversation and if you see that they want to tell you a story, be patient, listen to that story, and again, try to ask questions here and there to show that you're engaged, and express your appreciation, show that you really care about this person, and try to see things through this person's point of view, and just be sympathetic with their ideas and desires. When it comes to such things as criticism, it's futile because it puts people on defensive, and typically, it's human nature. It makes people want to justify themselves. So try to avoid criticism because it's dangerous, and it wounds the other person's pride. It hurts their sense of importance and arouses their resentment. As Thomas Carlyle once said, a great man shows his greatness by the way he treats little men. So try to remember that when dealing with criticism. When dealing with people, please remember that you're not dealing with creatures of logic. You're dealing with creatures of emotion, creatures that are bristling with prejudices, and creatures that are motivated by pride and vanity. And in general, to summarize what Dale Carnegie said in his book, in terms of secret of success, if there is any secret in terms of being successful, it lies in the ability to get the other person's point of view and to see things from that person's angle as well as from your own. And if you haven't read Dale Carnegie, How to Win Friends and Influence People, then I highly, highly recommend this book. It's an incredible resource for relationship building of any kind, professional, personal, whatever you need in life. Definitely highly recommend. Any
And
questions?
I must say one thing here, Alina, is that, I mean, most of us are in corporate environment, and there, I mean, I know we are talking about real estate investing, but in corporate environment, that's the most important soft skill that they talk about, is to build relationship with your peers, with your subordinates, and with your managers, so that you can grow further in your organization. So this skill
Absolutely.
building is just not for the business, it's even in your day-to-day life and at
Absolutely.
your workplace also.
Yeah, I couldn't agree more with you, Prashant. You're absolutely right. It's definitely very, very important. And Dale Carnegie does a fantastic job of detailing how to do that. So it should be a desk book all times.
Yeah, no more questions here, Elena.
Sounds good. So raising capital for real estate might not be as hard as you think. The art of raising capital has to do with the way you look at yourself. As a deal provider, you raise private capital for real estate investment opportunities for investors who don't have what you have. Yes, exactly. So you have your sweat, your contacts, your resources, and they are worth a lot more than you think. It's all about perspective. And therefore, for those folks that are in the process of learning on how to raise private capital for real estate and working with private investors, it's about remembering two things: learning what is it that those people want the most and giving it to them. Once you as an operator can identify what equity partners are looking for, you will have the best chance at getting them to commit to your next deal. So it's all about finding that perfect match. And that, I believe, concludes my presentation. Thank you very much for listening. And just a reminder, so my website is samofinancial.com. You can find a lot more information about what we spoke about today. I have a few articles on this as well, or this is my information, contact information if you want to reach out to me directly.
Thank you so much, Alina. That was a great refresher, so to say. I mean, we all talk about investing, and we do not talk about these fine inner qualities that are essential for our growth in our personal life. Again, sort of repeating the same thing: personal life, business life, and of course they are helpful in the real estate business. I have a question from Rinald. And he's asking, what are your thoughts on Fund and Grow program?
On which program? I'm sorry.
Yeah, there's a program called Fund and Grow. Rinald, do you have any more information on that program? I mean, I know maybe in Long Island, Melissa Shea has that program. Is that the same one you're talking about, or?
So Fund and Grow, I've never used that, but I believe it's for people that want to loan money. I've heard good things about it. I know there are multiple threads on it on Bigger Pockets. So for anyone who is looking to research, I would say if you're not registered on Bigger Pockets, register on Bigger Pockets and just search Fund and Grow, and you'll see multiple threads and people talking about it. I know there are pros and cons, and there are people that were able to raise funds through this program and use it, but again, keep in mind it's a loan. But you just like with everything else, you have to be very careful. I don't know how they operate in general. Also, during this time, a lot of companies are going through hardship. I'm not saying that they are, but I'm saying that you have to double and triple check every single company that you're engaging with right now to see what state they're in, and same applies to this and every other company. Hope that helps.
So there is a question here, Alina, is do you fund any deals yourself, or what is your criteria? How, what size deal typically you would look at to help in whatever capacity,
Sure. Sure.
Okay.
So I try to invest in all of my deals as long as I have the funds personally. In terms of my own criteria, so I evaluate every single deal that comes my way and do my own research on the market, the investment and sell, the underwriting, the comps for the market, as well as what the market offers and what is the strategy behind every single offering. In terms of the deals that I worked on personally, as far as the asset classes, as Prashant mentioned, I've been involved in multifamily, mobile home parks, storage. I personally also invested in senior living. The size doesn't really matter. From my perspective, I look at two components. I look at the quantitative and qualitative components. And from quantitative, it's not just one number. It's not just cash on cash or ROI. I look at everything together because, let's say, for example, IRR of 15% may mean very many different things. So I look at all of it: IRR, ROI, cash on cash, overall projections, the underwriting, how aggressive or not aggressive the underwriting is. And then I look at the qualitative, meaning what is the strategy, what's going to happen with this investment, where is the value add component. And I want to say that at this time I'm only investing in value add offerings. And for those that don't know what value add means, it's essentially when you buy in a property, it has some components to reposition it and bring its value up. That's why it's called value add, because you bring in the value of a property. The value of a property can be brought up in three different ways. You can either increase income, you can decrease expenses, or you can do both at the same time: increase income and decrease expenses. So essentially, you're looking to increase your bottom line, NOI, and that on NOI then indirectly is reflected in the value of a property. You're bringing it up by bringing up the NOI. So for me, the combination of both things, qualitative and quantitative, is important. If it makes sense, if I see that the market is on the path to progress, the jobs are flocking in, people are coming into the area, I see that there are major employers in the area, and these employers are not going to be replaced by the next Amazon tomorrow. Those are important components of a deal to me. And then the viable strategy as far as adding value, the location of the property, and the type, the type of tenants we're getting, and what are the expectations for the tenants, and the rents itself. So if it's, let's say, multifamily, and let's say it's an area that would not support, let's say the operators say, no, I'm going to raise rents by $150. If it's an area, let's say it's a C- to D+ area, there's no way you can raise rents by $150 and the current tenants will be able to support that. So I look for things like that would be red flags, and make a decision based on what I see in the offering and based on the conversations with the potential partners, and see whether the offering makes sense. Hope that was helpful.
Very good. Great thoughts, Alina. I appreciate that.
I have a question, Prashant, for Alina. Alina, thank you very much for all the good stuff you told us today about building up a relationship. I really appreciate all this stuff, and a lot of things I have heard it for the first time, though I do the same thing that you do. So I have two questions. My first question is about in your presentation here, you said equity partner as a passive investor.
Mm-hmm.
So how can you keep yourself legally right on the right side of the law by raising capital for other people's deals?
So you can't, and that's a great point. You cannot be just raising capital. If you bring in capital to the deal, you must have other roles in the deal. And again, like I said, there are many different roles within the general partnership, and they could range from doing the research, doing the underwriting, managing the investors, doing the asset management, working directly with the property management, and many, many more. So in addition to raising capital, you have to be doing other things as well. Raising capital is not sufficient to be part of the general partnership.
And for the raising capital, you cannot be given a percentage based on the amount you raise.
Correct.
That is by law, that is against. That's not something that can happen. You can be offered a GP percentage irrespective of the amount that you raise.
Correct.
Otherwise, if it is a percentage of the amount that you raise, if it is proportionate of that, then it is more like becoming a equity broker.
Mm-hmm. Yes, exactly.
Without broker license.
Yep.
So that is illegal, basically.
Correct. So my second question is, how do you find partners? How do you find syndicators that you work with?
It's same thing that we've covered today. It's building the relationship. I don't go looking for partners. I have a couple of groups that I work with, and I try to stick to this 2 or 3 groups without going anywhere else. It's it's a matter of establishing and building relationship, and that takes a while. It doesn't happen overnight. But you see what these groups are doing, and you see if this is someone that you want to be affiliated with, if your interests align, if your goals and plans align, and you want to associate with these people, and you want to be working with them. And then also you need to see if there is a fit, if what you do and what you can offer to the group beyond raising capital, like I said, it's a lot more. If you can, what you offer to the group matches with their needs, then, you know, it's a joint decision of the partners and yours to join the forces and work together on a particular deal.
So do you do anything other than raising capital for their
Yep.
deals?
Absolutely, absolutely, always.
Cool.
It's always, yeah, you have to, otherwise, like Prashant said, it's illegal.
Yep, thank you.
My
So,
pleasure.
so another question I have, Alina, is from my dear friend Lam Kwan, Dr. Lam Kwan. He is asking, which one is your favorite asset class, multifamily versus mobile home or self-storage? And which one is most recession resilient in your opinion?
I honestly, I don't have a favorite asset class. I have personally invested more in apartments than anything else. And simply because, number one, I started with apartments. And initially, when I was just passively investing, I started with apartments because it was close to home. Mentally, I lived in workforce housing myself when I was younger, so I understood that asset class really well. I knew what I was going into, and it kind of saved my time on research because I knew that asset class, and I felt comfortable with apartments. But after investing in so many, I realized that, you know, just like we diversifying our portfolios on Wall Street by investing in different stocks or different mutual funds, we should be doing the same with our investments. So at least that's how I feel, that I need to have a diversified portfolio. And I started looking for another asset class that I would want to invest. And that's when mobile homes and storage picked up my interest, and I decided to give it a try, first in one and then another. And like I said, I also invested in assisted living, which I also believe is a great asset class. Our senior population is growing despite what we're going through right now, and there's always a demand. Obviously, there are different niches within assisted living, and I'm sure Prashant can speak to it a lot as well from his experience. But I think there's definitely potential for some of the niches within assisted living, and they will be definitely progressing and expanding down the road. In terms of recession resilience, so the asset classes act differently depending on a location and depending on the condition that they're in. I can tell you that right now, looking at the all asset classes that we have so far, I think the best ones that are performing best, multifamily. Will it last? Will it continue that well, that way throughout the recession? I don't know. We have yet to see. I haven't personally invested through the recessions yet. Based on what I read in the past, self-storage has been the one that's been always up on the top, performing as one of the best asset classes during the recessions, and somewhere near it has always been the mobile home parks, being the most recession resilient asset. But I guess time will tell whether they remain the recession resilient or whether multifamily will reach that point as well with them. But again, with multifamily, we can't just generalize and say that it's not recession resilient, period. It could be a lot more recession resilient in one geographic location versus another. And, you know, when we talk about locations, we have to look at primary, secondary, and tertiary markets. And I think from my perspective, tertiary markets will most likely win the race. I think markets like New York, Los Angeles, Chicago will probably going to be hit the most, and will have to bear the most pains going through the times we're going through right now, while secondary markets being in a much better position and will be able to sustain through the challenges that we're going through right now. But that's my take. And, you know, full disclosure, I'm not a CPA and not an attorney, and this is just my opinion. So take it for what it's worth.
Very nice. Thank you, Alina. That was great. Great summarization on this question.
Pleasure.
yeah, we all talk about, we want to be in the recession resistant asset classes, and what you said is exactly correct. That's what we have also read is storage and then mobile homes and then apartments. And basically right now we are not feeling that much of a pinch on apartments, probably because, we have federal money coming in. And I mean, as a matter of fact, uh, in my deals, I'm collecting more rents than before right now, even though we have been into COVID for last 3-4 months. But again, as you said, it is yet to be seen how would we feel it when that money dries down, and uh, then we will see, where is the, apartment vacancies are going. So yeah, very well summarized. Thank you so much.
My pleasure.
Anybody has any other questions, guys? Feel free to ask any questions. I mean, to me, today's presentation was, just about enough information, very warm information, not just talking about investing. It's very warm and cozy kind of details. I appreciate that, and I hope everybody else appreciates it. And this is a very good, segue uh, into our next presentation, which we will have on July 2nd, on passive investing. I mean, we have talked a lot about syndication and, now relationship building. And from this relationship building, the next step, KK Singh, will be talking, he agreed. Thank you so much, Kishanji. Appreciate that. That next on July 2nd, is your turn to talk about passive investing. And these are a bunch of people, whom I know, and most of the people, those who are logged in today, most of us are, like great friend of mine, and this is one way of us sharing information and building relationship. Here, I really don't. Nobody gets anything out of it. Alina doesn't get anything out of it. I don't get anything out of it. But by sharing the information, we are hoping that we are building a relationship with everybody on the call. So that's my thought. I'm just being a little emotional here, nothing. So I feel that everybody has gotten something out of today's presentation. Feel free to ask if you have any more questions. You have a couple of more minutes.
I can ask one more question. Sure. Alina, what do you think? What is your opinion on the economic outlook?
I think we're entering a recession when it comes to the economic outlook. I think we're gonna go through some tough times in the next year or two. We will probably see additional changes around the presidential election, and obviously the outcome of that will have an even a greater impact on which way we're going to go. As you know, typically the Republicans have been pro-real estate and have been helping for real estate go in the right directions. But again, there are exceptions to the rule, so only time will tell who is going to be the president and whether the new laws and regulations that will be added will be in favor of real estate or not.
Thank you.
My pleasure. Pleasure. And guys, I couldn't agree more with what Prashant said. Real estate, just like everything else in life, is about building relationships. So if you got anything from today's presentation, I hope you got a few pieces from what Dale Carnegie preaches in his book. If you're looking to build a relationship, or if you're looking for someone, whether it's a partner, business partner, a significant other, or just a friend, it's all about approaching other person, making them feel important, and just really showing appreciation and that you care about what they say and what you hear from them. And like I said, healthy arguments are allowed, but trying to avoid fights is always encouraging. So that's very, very important to keep in mind.
So, Alina, we have one last question coming from Reynald again. He's asking, what is your favorite podcast other than Bigger Pockets?
I honestly haven't listened to Bigger Pockets in many years. I don't like them. Favorite podcast? Oh my gosh. I would have to look up at my phone. I don't look at the podcast names. I look at who is presenting, who is talking, and I prefer listening to books lately rather than podcast. I just got another great book recommendation yesterday, which I'm planning to listen in the next few days. Let's see. I know I listen to Ray Dalio from time to time. I like Real Estate Guys. I like Victor Minaj, again, because his podcast is short and sweet. It's like a couple of minutes. Whitney Sewell does a good job with syndications podcast. So those are a few of the good ones that I'm listening to.
That's great. Very good, Alina. I just left a link in the chat box. There is an ebook that I have put together, the impact of recession on United States economy. That's available on my website, our website, Multifamily Realty Gains. If anybody wants, please feel free to go there and download that. Other than that, I don't see any more questions, and we are at the top of the hour. Unless anybody has anything else pressing, I would like to say thank you very much, Alina. Appreciate your time today. It was a short and sweet presentation, very, very warm and cozy in my sentiment. And thank you so much, everybody else, all the participants. Even though we had about 60 registrants, we saw the most was like 18 or 19 who joined today, but that doesn't matter. I would be sending the recording of this presentation to everybody. You have Alina's email here to contact her and her website. And of course, our website, multifamilyrealtygains.com. And my email ID is Prashant at multifamilyrealtygains. Feel free to contact us. I mean, Alina, of course, she has given her email ID, and if you need any information from me, feel free to contact me, Prashant at Multifamily Realty Gains, and my cell phone number, I typically give that also, is 631-428-6479. Having said that, I would like to say good night, everybody, and we would talk to you in the next webinar, which is 2 weeks from now on July 2nd. KK Singh has graciously agreed to talk about passive investing. He's a great, great orator. Please try to make it to that presentation also. Once again, thank you all and good night.
Thank you. Good night.
Thank you. Good night.
Good night, everyone.
Bye.
Bye.
Bye-bye.